Welcome guys to the tutorial for Sqzpro indicator. This is an indicator that I use a lot and I know many of you have asked me about it. So in this tutorial I will break down the idea behind this indicator as well as how we should use it when we are in the markets. So first thing, how you get this indicator is you're on TradingView, you go to this indicators and look for Sqzpro. So the one with market 0, that's the one I use, and you can adjust the settings for your own preferences. Now let's discuss the idea behind this indicator before we delve into how to use it in the markets and what the different settings are. So this indicator is based on two classical indicators, namely Bollinger Bands and Keltner channels. What the difference between the Bollinger Bands and Keltner channels is the fact that they're both volatility indicators. They both measure how volatile the market is, but they do it in a different style. Bollinger Bands depends on where the market closes from day-to-day basis, while Keltner channels is based on the fact of how much the market moved from its high to its low, and that is used to define volatility. Now, how to exactly calculate those indicators, you can Google them. It does not serve the purpose of Sqzpro. But what I want you to understand is the idea that these two volatility indicators, aka Bollinger Bands and Keltner channels, measure volatility in a different way. So if the Bollinger Bands are tight, it means that the market did not really move from on a day-to-day basis much. AKA if it closed around 80 yesterday, it probably closed around somewhere near 80 today. While if the market in these 2 days, if it closed at 80, but it moved to 85 and then 75 and then closed at 80, Bollinger Bands won't show much of a difference, but Keltner channels will recognize that the price, the high and the low is in a wide range, and that the markets are being volatile. They're just not moving much on a day-to-day basis. So that's the basic difference between these two indicators that come together in Sqzpro to define a consolidation. Now, how do they come together? So Keltner channels are based on this metric called the ATR, which is the average true range, which defines the range of the market movement. While Bollinger Bands are an envelope of 2 standard deviation around the 20 moving average. So Keltner channel, usually you will have the 20 moving average and the envelope will be 2 ATR or 1 ATR. ATR is the average true range I mentioned. And Bollinger Bands, the usual metric that's used is 2 standard deviation of price movement around the 20 moving average. So both of them use the 20 moving average. Now, the way this indicator is working is it checks where the Bollinger Band envelope is in comparison to the Keltner channel. So if the Bollinger Bands, aka the bands based on where price is closing on a day-to-day basis, if those are outside the 2 ATR envelope of Keltner channel, then it shows that there's not much of a consolidation going on. That's because the price closes are far enough such that they satisfy the metric that we are seeing in the range that the price is showing. For example, in this indicator, Sqzpro, when the dots are green, it means that there's not much of a consolidation going on. So you can see once the price was moving directionally, right? For example here, when the price started moving directionally, you see that we have a big range, but the closes are far apart enough that there is no consolidation. So the green dots in this case show no consolidation. Now the black dots show a mild consolidation. What does that mean? That means that the Bollinger Bands, that the price has started contracting enough such that the Bollinger Bands have come within the 2 ATR envelope of Keltner channels. So you don't really need to understand what Keltner channels or Bollinger Bands are. I'm giving you this background. The final summary is all you need to understand is the different kinds of dots and what it means in terms of contraction. So when I see black dots, right, it means it's a mild contraction. The price is not contracted long enough. It has started to contract in a smaller range than if there's no contraction at all. So let's say in this case, we have a lot of movement, all right? I'm checking out this area where you have green dots, you have a lot of movement, and then price started to move in a smaller range, and you can start to see black dots appear. So what I would do as someone looking for boxes is I would look at these black dots and look for a contraction, and it becomes obvious that there's a contraction here. Now on the daily chart, you see that's not much of a contraction, it's only 4 days. But if you go down on the 4-hour or the hourly chart, it's more of a box that you can trade from. And I might not have noticed it if not for the black dots here. Then the second form of contraction is something that's tighter than this, that's bigger than this. It's more important box would be the red dots. That means that the Bollinger Bands have now come within 1.5 ATR of the Kellner channels, aka 1.5 times the range in which price has been moving. It just means that it's a tighter contraction than the earlier ones we saw. So in our case, we have this red dots and we can see the box, and you can see it's consolidated here for longer. It's in a small range, and it will be a stronger box than what we saw with the black dots. The third and the final one are the yellow dots, in which case the Bollinger Bands have come within 1 ATR envelope of the Kellner channels. That means that the price is not really moving much on a day-to-day basis, like on a closing basis it's not differing that much, but it still has a range. And what we mean by that is you see some volatility, but price is not going anywhere. That's a box. That's a tight contraction, and we want to be in it. So in this case, we have the yellow dots, and you can see how tight of a contraction this is, and it's the strongest kind of box you would see. Now, when you see yellow dots, it means a very tight contraction. It means that price has not really gone anywhere for a long time on a closing basis, and it's getting ready for a big move. So once you see price break out of a box that has yellow dots, you would see a significant move, in which case something like this. For example, Merck went all the way from 88 to 100, straight line up. So what's the purpose of all this? Why am I explaining all of it? I wanted you guys to see that the different kind of boxes that form based on different kind of compressions have different kind of moves. The tighter the compression, the stronger the move. The second thing, or how I use this indicator, is I would be flipping through a lot of charts, and sometimes I might not see a box, right? Let's look at some examples. Let's say Tesla, right? I'm flipping, I don't see any box, green dots, okay, I won't really care then. Apple, all right, I don't really see a clear box yet, but I see that there is some form of contraction going on, black dots. So I would look for a box. Now, on the daily chart, the box might not be as clear. So let's see how things are on the weekly chart. All right, price has been consolidating sideways between this range, 151 and 138. There you go. I think that's our box. So when I'm going through a lot of charts, and sometimes on the first glance on a daily chart or a weekly chart, I might not see a consolidation, but if I see some dots here, right, like these black dots or yellow dots, I will look harder for a box. And that way I can recognize contractions when to my naked eye I would not see them. That's the only way I use this indicator. Obviously you can assign boxes different values based on how compressed they are, right? Like if you see a box with the yellow dots, you should pay more attention to it compared to one with black dots, which just means it's only starting its contraction. So you can use it that way. But the main idea behind this indicator is I use it as a screener when I'm going through a lot of charts, and the three different categories of boxes we have is very tight contraction or a tight squeeze. That would be the yellow dots. A medium-sized contraction, it's Not a tight squeeze, but it's not a mild one either, aka contraction. That would be red dots. And then the mild squeeze is black dots, which means the box or consolidation has just started to form. If it breaks out, it would have some movement, but not as strong of a movement as something with a tight squeeze. And then the last but not the least is the green dots. It shows that the price is not really contracting, so there's not much boxes to be formed there. I hope that made sense. If you have any questions, feel free to ask me in the chat and I can elaborate.